So let's see what will happen. Next week is 24th on Monday. Tuesday will be 25th. So we're just counting down now to that very important meeting on the calendar. It's called the Monetary Policy Committee meeting. So those folks will sit together on Monday and Tuesday. Lunchtime Tuesday, they will make those announcements. The central bank chief, Godwin Emefiele, will read the communique. So let's get our countdown to that. What's the outlook from the marketplace? Is it to hold or to hike? Looking for a rate cut is a little bit far-fetched. So let's start this round of conversations. Will take us through the rest of this week and into the better part of next week. Let's start this with Ayodele Akinwunmi, who is the head of research at FSDH Group. He's joining us live at our studios at the Nigerian Stock Exchange. Ayodele, it's good to have you there. The studio there is just behind you, so you just take a look out of the window and you can see your office. Where you are. So you're the one having fun. But again, this is an interesting time.
Thank you very much for having me.
It's good to have you. Thank you very much. I hope you find it very cozy and nice in there.
Yeah, we are fine here. Thank you for having me.
It's great. Thank you for your time this morning. Let's get on down to business. What's the outlook from FSDH, your group, regarding next week's meeting?
Okay, thank you very much. We are going to release a note detailing our expectations of the meeting that will be taking place, the Monetary Policy Committee meeting between Monday next week and Tuesday. The result will be announced the decision will be announced on Tuesday. But given all the developments, both at the global market, how it impacts the activities there, how it impacts what we are having in Nigeria here, and the development in the macroeconomic environment and the financial market, it appears that the central bank and the MPC may likely maintain a hold decision, while the central bank will continue to use open market operations, sales of treasury bills in the secondary market to moderate liquidity in the market to ensure stability in prices, both in inflation rates and exchange rate, which seems to be a major area of consideration now. The sluggish growth that we recorded in the second quarter of this year does not justify a rate hike. Otherwise, it will be counterproductive to what the central bank is trying to do. However, again, the fact that we're having rising inflation rates and then the stability we have in foreign exchange market, when interest rates seems to be going up in the international market, does not justify a rate cut. So we think the best decision at this meeting will be to maintain rates at the current levels.
The last meeting, Ayodele, there were members on the MPC asking for a rate hike. Do you think this situation since then since July, makes for that rate hike to occur? But you folks at FSDH believes that hold will be a position on Tuesday next week.
We have major issue prior point in Nigeria at the moment, which is how to grow our economy, how to stimulate the economy. I mean, during the introduction, you talked about the discussions between the central bank and banks, and also the MTN regarding the fine and then the issues around that area, which for us is positive to the market. But then if you look at the telecom sector, going by the GDP number that the central bank, the National Bureau of Statistics, released in the second quarter of this year, you realize that that growth was, stimulated by the telecom sector. Actually, if that sector had not grown, maybe would have slipped back into a contraction because of the sluggish growth in agriculture, negative growth in trade, and negative growth in sluggish growth also in manufacturing. So the economy needs a lot of policies to stimulate activities across the sectors of the economy, and therefore rate hike at this level will not be appropriate. The only two major arguments that will support rate hike is the fact that we begin to see uptick in inflation rates, and then the fact that we are seeing marginal pressure from the foreign exchange market. The inflation rate that went up slightly, about 11.23 thereabout, in the month of August, we linked it to the problems that we have in agriculture. Food prices went up so significantly, and we think that it is because of the problems we have in the food producing regions of the country, which in our own view, monetary policy raising rates will not be able to resolve that. So why do you want to do that and then allow interest lending rates in the country to increase when the central bank itself is saying we are looking for avenues, measures to encourage manufacturing companies and even agro-processing companies to lend, to borrow money at maybe 9% rate. So that would be counterproductive. Again, if you look at what is going on at the foreign exchange market, the yield has moved from 12–13% to about 15% for 1 year treasury bill rates. That is good. That's a good move to ensure that money that would have ordinarily moved out of the country remain. And then on number two, the fact that maybe attracting the foreign portfolio investment, which you need at the moment to maintain stability in the foreign exchange market. If you raise rates and then treasury bill do not move, at least the short end of the market, you are not going to achieve anything. And even if you raise rates at the moment and there is a problem from oil price, oil production, it may not even be able to salvage the situation. So for us, high unemployment rate at 18.8, third quarter 2017. High fragile growth, which if appropriate measures are not taken at the critical time, that possibility of going back to what is going on in South Africa now, where it's been officially declared that they are in technical recession. So justify that we just maintain the current policy rates and then implement policies that will encourage activities in the country.
Ayo, do you think the regulator or the monetary policy folks are doing enough on their own side? But if we hold rates next Tuesday, there will still be a lot of gap there from the fiscal side moving forward. September, we could now do with another meeting in November or thereabout, then we're done for the year. So if we put things if we take a look forward and try to see where the interest rate trajectory will be going forward, if we take a hold next Tuesday, when is the hike likely, or when will it cut be likely on your horizon?
Because of election consideration, money may likely be spent. Going forward, primaries are beginning to take place. We have election this weekend in Osun State. We're beginning to see primaries across the country, both from the ruling parties and the PDP, the main opposing party in the country. It may not be appropriate for the central bank or the monetary policy committee of the central bank to reduce rates, maybe between now and after election. Now, because they want to ensure that they mop up money from the system, and so raising rates may send a different signal that they are not doing what they need to do. Again, given the fact that the expectations are, our experience is that the FOMC, Federal Open Market Committee of the U.S. Federal Reserve, will meet again this next week in the U.S. to determine what the appropriate policy response will be to manage their economy. We expect them this month that the FOMC will likely hike rate by additional 25 basis points. So the fact that they may likely hike rate and the monetary policy normalization across advanced country, and why we have the problems in Turkey, the counterpart in Africa, South Africa, that what is going on there in recession. So the possibility of capital flight may not, and then election consideration here may not justify a rate reduction. But I need to add at this point that the central bank, as far as monetary policy is concerned in Nigeria, I think central bank is doing well. They are doing their best. Federal government also is trying to do, but then we expect more measures from the fiscal authorities to ensure that they complement the policies of the monetary policy, to ensure that we have inclusive growth, we have broad-based growth, there is security, lives, and property. We advocate that the federal government needs to urgently engage the people in the crisis region that is affecting agri production, you know, because otherwise, whatever policy, central bank monetary policy that is implemented will not be effective. There is a limit to which they could be effective if there are no complementary fiscal policy measures to ensure that we have an economy that people believe in, that will engender economic activities across sectors of the economy. So that's what we think may likely happen. So, but if there are going to be a rate cut, I think it may likely be after election, not before election. And that will be if there is stability in oil price, oil production, money begins to come in, and then we have higher revenue for the government. And that's what we think will likely happen.
Okay, a final one, and in just about 60 seconds. Ayo, where do you think all of this leaves the market in the near term?
We think that Nigerian economy has very great potentials. We think that there are a lot of opportunities both in the real sector and the financial market. And a number of investors, yes, election consideration is a major issue, but what we always say is this: we have always been here a number of times now since we returned to the democratic regime that we have, which is the best form of government anywhere in the world. Some investors maybe take some gradual entry into equities market, taking advantage of the current low prices and position there. In fixed income, we see all the opportunities also, but in terms of the real economy, investment may just want to wait a little bit and see who wins the general election in 2019 before they take long-term investment decisions.
Okay, Ayodele Akinwunmi, thank you very much, Head of Research at FSDH Group. We thank you for your time today.